So here we are, the 10th of July. And same question keeps coming up, of course. What's going on with interest rates? What's driving interest rates? What's making things what they are? Why are things going negative? Well, as we've seen with what's going on overseas, it has a major effect on it. But before we get into that kind of stuff, let's do a little share screen here. Let's take you to where you should probably be going. And where is that? Not that I'm trying to promote other freaking people, but here's where we're going on Amazon. We're going to do some redneck economics. I can't really, I got to think that it would have already popped up just by how many times I looked at this. Because so we've got 31. Somebody did another review. Let's take a look here and see what happened. See what the latest one is. I have to hunt for it because I'm going to have to do this ultimately 31 reviews. I'll go through it, see what it is. But guys, take a look at these reviews. These are freaking badass what people had to say. I love seeing what people have to say, period. I just enjoy it. See more reviews. You can read through all of them. A lot of people have done some amazing write-up on it. And you can tell that they read it. That's what I love about it. You can tell that they read it. So take a look at that. Now, why am I bringing that up? Why is that a thing? Why am I asking you to go there? Because when you get that, you get one of those personalized ones, the exclusive one, the exclusive 85 that'll be released. There's 88 in existence. I keep 3. 85 of them will go out to those who do the first 85 reviews that I can, 5 stars that I can get my hands on to figure out who you are. So if you do one and you don't alert me and I can't tell who you are because your code name on there, I don't know what to do, right? Because I'm going to need to know how to get this to you because it's going to be signed by myself, Robert Allen, the King Dangling OG of investment real estate, Dolph DeRoos, international real estate investor, both international bestsellers, and Eric Chapman, the guy who did all the artwork. So you're going to want to get those. Just telling you, you're going to want to get it. And once it's gone, it's gone. I'm not going to do it again. I stamp them, sign them. They're embossed. They are 100% unique. Just put it that way. Now let's look at what's going on in the bonds, because that's why you're here. I'm here for Aaron Chapman to spout off, but I'm going to take advantage of the opportunity and spout off about my damn book. And I'm working on another one that's going to be even better. So here we go. The mortgage-backed securities. We had, again, bomb situation hit. So if you look back to where last time we had a bombing, that is where that hammer, that negative hammer, I guess you want to call it, or bearish hammer, I don't know what they'll call that one. But then we had it again. We had the other, and then we've been experiencing this. We got this bit of a floor here, and that floor might be a little off. It might be here, actually, when you consider that right there. That might be our floor. Our floor might be down here. It's somewhere in this area. We got this floor, and it's bouncing off of that. So this is holding pretty good. Now, the reason it's holding is because things have kind of tensions come off a little bit, but they're still a little worried about what's going to happen with inflation. Inflation is not completely under control yet. That is the worry that they have, is what's tomorrow's value of the dollar. And that's why they're trading here ahead of what they believe the value will be later, not what the value is presently. So that being the case, that is right now is some people asking, are we going to get interest rates go lower again? Do I wait? Maybe see if I can get it down 1/4 or 3/8? Guys, I can't say one way or the other. But when it does move, look at how fast these movements are. This is 1, 2, 3, 4 days in movement, and then turns around, 4 more days and it's back down where it was. That's so fast that the rates are staying fairly consistently in the higher end of it, not the lower end of it, because it turns around so quickly. Bond traders are not willing to put their money up just for it to flip around on the day that they go into the trade. Now tomorrow and 2 days later, now they're in a worse position. They put that money up for nothing, right? We had a long run here where we ran it in the best interest rates we'd seen for years. Because the higher it is, that means the more money that's going into it, the higher the lower the interest rate goes. But look at the risks here. Way back September 2024 is when we were in that better spot. It took us all the way to January 2026 to get back above it. Look at all the time we were below that area, right? So this is where our best rates will be. But that's only when they start talking about quantitative easing. And right now they're not talking about that. Right now they're more focused on what's going to happen overseas and what's going on with the global issues, right? So that being the situation, I think our risks are it being here because we already tested it very recently and it came right off of it. So we're going to have to work to get above this level. There's going to have to be some good news saying that for bonds, which means the economy is a little bit rougher than what they think, and the prices are coming down, and there's not as much inflation. Then we got to get to this point. This point here to get here again, has to be bond-friendly news. And to get above this, we have to be talking about some quantitative easing a little bit. To get above this, they actually have to be serious about quantitative easing. And if they get serious about quantitative easing, then they have to actually start doing quantitative easing to get above this line. So we have a long ways to go to see some really some lower interest rates than what we have today. Right now, I just closed on one a couple months ago. I locked and it was worse than this. So I just lock. Guys, move forward. You're buying an instrument with somebody else's capital. Their money is declining in value because they're getting paid back with the US dollar, which is declining in value. Your trade, which is using their capital, you're trading that bond to secure a asset that's going to go up in value. It's going to be paid down by somebody else. Somebody else is paying them back. Your value is going to go up. Your rents are going to go up, and you get the tax deductions. You're the winner in the trade. So you need to quit jerking off and start making trades. Making trades with bond capital to go buy hard assets. It's that simple. Reach out to me. We'll talk about it a little bit more. info@aaronchapman.com, aaronchapman.com. And if you want to get this, you go to Amazon or quitjerkingoff.com. Appreciate you guys.